Hey guys, How To Crypto here. Welcome back to the channel. Today we're diving into one of the hottest topics in tech investing right now, the explosive demand for AI compute power, and why it's creating massive opportunities and risks for investors. As of November 2025, AI isn't slowing down. It's accelerating. Nvidia just dropped a bombshell earnings report showing demand is off the charts, with Blackwell chips sold out and $500 billion in orders locked in through 2026. Global AI capex is hitting $400 billion this year alone, projected to surge another 20 to 50% in 2026. But here's the thing. There's a massive shortage of GPUs, power, and data centers. Hyperscalers like Microsoft, Google, and Meta are spending hundreds of billions, yet supply can't keep up. Forecasts show AI-relevant compute growing 10 times by 2027, but bottlenecks in chips, energy, and infrastructure mean the winners will be companies that can deliver real capacity fast. So, what do investors need to know? Focus on the full stack. Chip makers, model builders, cloud providers, and even ex-Bitcoin miners pivoting to AI hosting. Let's break down the key players you mentioned: Nvidia, Tesla, OpenAI, Palantir, Nebius, Grok, Alphabet, IREN, and CIFR, and why they're positioned, or not, for this boom. First, Nvidia, the undisputed king. Their Q3 revenue hit a record $57 billion, up 62% year over year, with data center sales exploding. CEO Jensen Huang says Blackwell sales are insane, GPUs are sold out, and they're on track for mid-70% gross margins into 2027. They have $500 billion in bookings for Blackwell and Rubin chips through 2026. Nvidia dominates 80 to 90% of AI accelerators. Risk? Competition from AMD, custom chips, but Nvidia's software moat, CUDA, and roadmap keep them ahead. If you're betting on AI, Nvidia is the safest pick. Still, Tesla? It's not just EVs anymore. Elon Musk's Dojo supercomputer and full self-driving rely on massive AI training. Tesla is buying tens of thousands of Nvidia GPUs plus building their own. With xAI, Elon's AI company, raising billions at $200 billion plus valuations and launching Grok 4, Tesla benefits from shared tech and robotaxi optics ambitions needing insane inference compute. Tesla stock could ride the AI wave hard if autonomy delivers. OpenAI, private, but the demand driver. They're burning through compute like crazy, with deals tying them to Microsoft, Azure, and Nvidia investments. Revenues hinted at $100 billion run rate by 2027, but they need partners for scale. Palantir, PLTR, enterprise AI leader. Their AIP platform is seeing explosive adoption for real-world AI deployments in gov and business. Not as hardware-heavy, but software margins are fat, and they're less exposed to compute shortages. Now, the under-the-radar winners, Nebius Group, ex-Yandex. This is a breakout story. They're building pure AI cloud infrastructure, massive deals like $17 billion plus with Microsoft and $3 billion with Meta for dedicated GPU capacity. Revenue up 355% to $146 million in quarter three. ARR guidance $900 million to $1.1 billion for 2025, targeting $7 to $9 billion by 2026. Early access to Nvidia, Blackwell to Rubin, data centers scaling fast in US, Europe. Nebius is the neo-cloud play, cheaper, faster than hyperscalers for AI devs. Grok and xAI. I think Alpha Labs means Grok, or xAI's Grok. Grok is the inference speed king with LPUs, valuation approximately $7 billion after recent rounds. Perfect for low-latency AI. XAI raised another $15 billion at $200 billion plus, building Colossus supercluster. Both are challengers to OpenAI, fueled by Elon hype. Alphabet, Google, steady giant. Gemini models, TPUS, $40 billion in new data centers through 2027. Deep pockets, but more balanced than pure AI plays. Finally, the wild cards. Ex-Bitcoin miners like Iris Energy, IREN, and Cipher Mining, CIFR. These guys have power contracts, land, and cooling ready, perfect for AI/HPC. IREN up 500% plus YTD, pivoting hard to liquid-cooled data centers. CIFR signed 3 billion plus deals, e.g. with Google-backed FluidStack. AI hosting can generate 10 to 25 times more revenue per megawatt than mining BTC. Stocks are volatile, but in a compute crunch, they're gold. Bottom line for investors, AI demand is real and compounding. Training, inference, agents all exploding. But watch risks. Power grids straining. Data centers could eat 10+% of U.S. electricity soon. Chip delays, and if ROI on AI doesn't materialize fast, capex could slow. Nvidia's guidance just crushed bubble fears, but diversify across the stack. Favorites? Nvidia for stability, Nebius for growth torque, miners like IREN/CIFR for asymmetric upside, PLTR for software purity. What do you think? Is this the biggest tech boom ever or bubble 2.0? Drop comments, like, or subscribe for more 2026 forecasts. See you next time. Also write your favorite tech stock in the comments. See ya.